3 days ago, I woke up to a message from my friend Jin in Singapore that made my blood run cold. "Check the silver markets," he wrote. "Something's very wrong." I pulled up my trading screen at 4 in the morning, coffee still brewing, and what I saw made absolutely no sense whatsoever. COMEX silver, the official price that every American sees when they Google silver prices, was sitting at $32 per ounce. Normal, stable, nothing alarming, but Jin sent me screenshots from dealers in Shanghai, Hong Kong, and Mumbai, and I had to look 3 times because I thought my eyes were playing tricks on me. Physical silver bars, the actual metal you can hold in your hands, were being sold for $195 per ounce. Not 32, $195. That's a 600% premium over the paper price. And here's what made my hands shake as I zoomed in on those images. This wasn't some random dealer trying to rip people off. This was happening across multiple countries, multiple dealers, all at the same time. For 72 hours, the Asian physical silver market completely disconnected from the Western paper market, and almost nobody in America even knew it was happening. Let me take you back to explain what a COMEX freeze actually means, because this is where the whole story gets absolutely wild. COMEX, the commodity exchange in New York, is where silver and gold futures are traded. When you hear about silver prices on the news, on financial websites, on your stock ticker, you're hearing COMEX prices. But here's the critical thing most people don't understand. COMEX doesn't actually trade physical metal most of the time. It trades contracts, promises, paper certificates that say you own silver, but the silver itself is sitting in a vault somewhere and you may never actually touch it or see it. It's like having a claim ticket for your coat at a restaurant. Except imagine if that restaurant issued 1,000 claim tickets, but only had 100 coats in the closet. As long as everyone doesn't ask for their coat at the same time, the system works perfectly. But the moment everyone shows up demanding their actual coat, the whole thing collapses into chaos. And that's exactly what started happening 72 hours before I got that message from Jin. What I discovered as I dug deeper, making frantic phone calls to contacts in the precious metals industry, reading through obscure trading forums at 5 in the morning, checking data that most people never even look at, was absolutely stunning. Asian buyers, and I'm talking about everyone from wealthy individuals to small investment funds to family offices managing generational wealth, had started demanding physical delivery of their silver. Not paper contracts, not certificates, not promises. They wanted the actual metal delivered to their vaults, to their secure facilities, to their possession. And COMEX, the mighty COMEX that's supposed to be the backbone of precious metals pricing in the entire world, couldn't deliver. They literally froze. Trading continued on paper. Prices stayed artificially calm on the screens that Americans were watching. But behind the scenes, the physical delivery system had essentially seized up like an engine that just ran out of oil. Meanwhile, in Asia, where people actually wanted to buy real silver bars and coins they could hold, dealers had no choice but to raise their prices to $195 per ounce, because that's what it actually cost to source physical metal in a market where supply had essentially vanished. I called Marcus, a precious metals dealer I've known for 15 years who operates out of Los Angeles and has connections throughout Asia. His voice was tense, almost panicked, something I'd never heard from him before. "It's like 2008 all over again," he told me. But worse, because this time it's not just one market, it's the entire physical silver supply chain across Asia that's broken down. He explained that refineries were running at full capacity but couldn't keep up with demand. Shipping companies were reporting delays they'd never seen before. Storage facilities in Singapore and Hong Kong were completely full, with waiting lists for vault space. And here's the part that should terrify every American watching this. None of this was being reported in mainstream financial media. CNBC wasn't covering it. Bloomberg had maybe one small article buried on page 7 of their commodities section. The Wall Street Journal said nothing. It was as if a massive financial earthquake was happening on the other side of the world, and American media had decided to just pretend everything was fine. Nothing to see here, move along. The mechanics of what happened during those 72 hours reveal something deeply disturbing about how our financial markets actually work. When Asian buyers demanded physical delivery, COMEX dealers, the big banks and institutions that are supposed to have massive stockpiles of silver ready to deliver, started issuing what's called force majeure notices. That's a fancy legal term that essentially means, sorry, we can't fulfill our contract because of circumstances beyond our control. Imagine if you went to a bank to withdraw your money and the bank said, sorry, we don't actually have your money right now, but here's a piece of paper saying we owe it to you. That's essentially what happened. Contracts that promised delivery of silver were suddenly unable to deliver that silver. But here's the truly insane part that made me question everything I thought I knew about these markets. The paper price on COMEX barely moved. It stayed around $32 per ounce, calm as a summer lake. while the real-world price, the price people actually had to pay to get physical metal in their hands, exploded to $195. I spoke with Dr. Sarah Chen, an economist who specializes in commodity markets and has been warning about this exact scenario for 3 years. Her frustration was palpable through the phone. "This is price manipulation at a scale that should be illegal," she told me, her words measured but angry. "You have a two-tier market where the official price that everyone sees and trusts has absolutely no connection to reality, to what actual buyers and sellers are experiencing in the real world. It's a fantasy price, a made-up number that exists only on computer screens, while real people in real markets are paying 6 times that amount for the same commodity." She explained that this disconnect isn't new, it's been building for years, but the 72-hour blackout made it impossible to ignore anymore. The emperor has no clothes, the system is broken, and the people who are supposed to be regulating these markets are either asleep at the wheel or deliberately looking the other way. What makes this even more concerning, what kept me up for 2 nights straight researching and verifying every detail, is understanding why Asian buyers were so desperate for physical silver in the first place. It wasn't random, it wasn't panic, it was strategic, calculated and based on information that most Americans don't have access to or don't understand. Silver isn't just a shiny metal that people collect or use for jewelry. It's an industrial metal that's absolutely critical for solar panels, electric vehicles, electronics, 5G infrastructure, and dozens of other technologies that define our modern world. China alone is building solar capacity at a rate that requires hundreds of millions of ounces of silver every single year. India's electronics manufacturing is exploding. Southeast Asian countries are racing to build out their technological infrastructure. And all of this requires silver, massive amounts of silver, more silver than the world currently produces from mining operations. Asian buyers understand this. They're not buying silver to speculate or gamble. They're buying it because they know they're going to need it for actual industrial production in the next 5 to 10 years. And they'd rather secure their supply now, even at $195 per ounce, than risk not having any supply at all when they desperately need it. The implications of this 72-hour event ripple out in ways that should concern every American, whether you own silver or not, whether you care about precious metals or not. First, it reveals that the pricing mechanisms we've trusted for decades, the official numbers we see on financial news, might be completely disconnected from reality. If this can happen with silver, what else is being manipulated or misreported? What other markets have these massive gaps between paper prices and physical reality? Second, it shows that Asian markets, Asian buyers, Asian demand is now powerful enough to overwhelm and essentially ignore Western pricing structures. That shift in economic power is profound, and it's accelerating. Third, and this is what really keeps me up at night, it suggests that we might be heading toward a broader crisis in commodity markets, where the paper promises vastly exceed the physical supply. And when everyone tries to collect on those promises at the same time, the whole system could collapse like a house of cards in a windstorm. I reached out to Thomas, a former COMEX floor trader who left the industry 5 years ago disgusted with what he'd seen, and his words were chilling. "I've been waiting for this," he said matter-of-factly. "The leverage in these markets is insane. For every ounce of physical silver that actually exists in COMEX vaults, there are probably 200 to 300 ounces worth of paper claims against it. It's a Ponzi scheme that only works if nobody asks for the real thing. The moment people start demanding physical delivery, the whole lie falls apart." He predicted that this 72-hour event was just the beginning, a warning shot, a crack in the dam. He believes we're going to see more of these disconnects, more freezes, more situations where paper prices and physical prices diverge so dramatically that it becomes impossible to pretend everything is normal. What happened in those 72 hours also exposed something uncomfortable about information flow and media control in our modern world. Why wasn't this front-page news? Why weren't financial journalists investigating this massive price disconnect? Why were American investors kept in the dark while Asian markets were experiencing what amounts to a supply crisis? I don't have definitive answers, but I have theories that range from innocent explanations like media incompetence and lack of expertise in commodity markets to more disturbing possibilities involving powerful financial institutions that benefit from keeping prices suppressed and don't want public attention on the massive leverage and potential fraud in these markets. Either way, the fact that such a significant financial event could occur with so little coverage, so little public awareness, so little regulatory scrutiny, should frighten anyone who believes in transparent markets and informed investing. So what does this mean for you, sitting at home watching this video, wondering if any of this actually matters to your life? It matters more than you think. If you own silver, whether physical coins in a safe or shares in a silver ETF, you need to understand that the price you're seeing might not reflect the true value of what you own. If you're thinking about buying silver, you need to know that there's a massive difference right now between paper silver and physical silver, and that gap might get wider before it gets narrower. If you don't own any silver but you care about economic stability, you should be concerned that major commodity markets can disconnect from reality for days at a time without any regulatory intervention or public disclosure. And if you're invested in anything, stocks, bonds, real estate, you should ask yourself what other markets might have similar hidden problems, similar disconnects between what the official numbers say and what's actually happening in the real world. The 72-hour blackout ended not because the problems were solved, but because Asian buyers temporarily backed off, perhaps waiting to see what happens next, perhaps regrouping and planning their next move. The price differential narrowed somewhat, though physical silver in Asia is still trading at significant premiums over COMEX. COMEX resumed more normal operations, paper trading continued, and the financial world moved on as if nothing had happened. But something did happen. A curtain was pulled back, a truth was revealed. The markets, we've been told, are efficient, transparent, and reliable, showed themselves to be fragile, manipulated, and potentially fraudulent. And now that we've seen behind that curtain, now that we know what's possible, what's actually happening when nobody's looking, we can't unsee it. I'm treating any official commodity prices with deep skepticism. I'm researching the difference between paper assets and physical assets in my portfolio. I'm asking harder questions about counterparty risk, about whether the institutions holding my investments actually have what they claim to have. I'm diversifying not just across asset classes, but across jurisdictions and between paper and physical holdings. I'm assuming that what happened with silver could happen with gold, could happen with other commodities, could eventually spread to other markets. I am preparing for the possibility that we're living in the late stages of a financial system built on leverage, promises, and paper claims that vastly exceed underlying reality, and that when this system finally breaks, it's going to break fast and catch most people completely off guard. The 72-hour blackout wasn't the crisis. It was the warning. It was the fire alarm going off before the building fills with smoke. Some people will hear that alarm and take action. Others will assume it's a false alarm, roll over, and go back to sleep. I know which group I want to be in. The question is, which group do you want to be in? Because the next time this happens, and I believe there will be a next time, it might not last just 72 hours. It might be longer. The price gaps might be wider. The inability to get physical delivery might be more widespread and more permanent. And by the time everyone realizes what's happening, by the time the mainstream media finally decides to cover it, by the time regulators pretend to investigate, it'll be too late to protect yourself. The time to pay attention is now. The time to ask questions is now. The time to understand the difference between what you're being told and what's actually happening is right now, in this moment, before the next alarm sounds and everyone scrambles for the exits at once. Don't say nobody warned you. Consider yourself warned.